If your estate is worth more than £325,000 or £650,000 for married couples and civil partners, it's likely some of it will pass to HMRC in inheritance tax when you die. One of the most straightforward ways to make sure inheritance tax isn't charged unnecessarily is to consider giving away some of your assets whilst you're still alive. You are allowed to make some gifts without any tax consequences being due after your death. These usually include gifts to your spouse or civil partner, or if you'd like to leave money to a charity. Most of the time, it also includes gifts to individuals made more than 7 years before your death. These are known as potentially exempt transfers, or PETs for short. They are a kind of lifetime transfer. In other words, a transfer made in your lifetime rather than after your death. For a lifetime transfer to be potentially exempt, it must meet certain conditions, subject to some exceptions. The transfer must be a gift made by an individual to another individual or to a specified trust. This means, for example, the gift cannot be made from or to a corporation or a company. For these transfers to be fully outside your estate, you must survive the gift by 7 years. So why are they potentially exempt? A transfer of assets from one person to another under the 7-year rule will only be known for sure to be exempt from inheritance tax after the 7 years are up. So inheritance tax is not payable at the time of transfer, but it could potentially be payable if you don't survive for 7 years. So if you don't survive the gift by 7 years, the PET, potentially exempt transfer, becomes a chargeable consideration and is added to the value of your estate for inheritance tax purposes. If the combined value of your existing estate and the gifts is more than the inheritance tax threshold at the time of your death, and it's currently £325,000 for an individual, then inheritance tax may be due. So let's take a look at this 7-year rule in a bit more detail. If you die within 7 years of giving a gift, there's inheritance tax to pay. The amount of tax due depends on when you gave the gift. So gifts given in the 3 years before your death are taxed at 40%. Gifts given 3 to 7 years before your death are taxed on a sliding scale. This is known as taper relief. If you give the gift between 3 to 4 years before your death, the tax payable on the gift is 32%. If it's 4 to 5 years before your death, it's 24%, and 5 to 6 years, the tax is 16%. 6 to 7 years, and you pay, or your estate pays, 8% tax. And as mentioned, if you survive 7 years, there's no tax to pay at all. So how is the value of the potentially exempt transfer calculated? The calculation of the transferred amount is different to that than on death. When you die, your assets are simply assessed at the market value. However, a lifetime transfer, such as a potentially exempt transfer, is calculated on a loss to donor principle. In other words, how much has your estate decreased as a result of the gift? To give you an example, if you gave a gift of £400,000 to your daughter between 3 and 4 years before you died, the gift will initially use up the available nil rate band of £325,000. The oldest gifts are attributed first. So therefore, the remaining £75,000 on death is then subject to inheritance tax, in addition to inheritance tax on the residual estate. Because the remaining £75,000 was given over 3 years before your death, you get taper relief, or your estate gets taper relief. So in this case, if the whole gift was made between 3 and 4 years before your death, the tax charged on the £75,000 would be 32%, not the 40%. So inheritance tax due on the potentially exempt transfer would be £24,000. Gifts where you still have an interest in it, no matter when you've given it, don't qualify as a potentially exempt transfer. For example, if you continue to live rent-free in the house that you gave your child more than 10 years ago, sadly, the house would still be considered part of your estate and therefore subject to inheritance tax. This is known as a gift with reservation of benefit. Thank you so much for checking out my YouTube channel. I'm Justin King. I'm a chartered and a certified financial planner, and my aim is to help people live successful lives. That often involves understanding your money. I hope you've enjoyed this video. If you have, please press the like button to help more people like you and find my channel. And check out the description below for any useful links that I've discussed in this video. For now, I'm Justin King, helping you live your best life.